This is Frontier Opening Bell, and I'm Temple Ashaju. Thank you for joining us on our edition of the show for the 27th of January 2021. With us on the program this morning is Ali Kansachu, CEO and founder of Rich Frontiers Management in Nairobi, Kenya, and Boson Amofaye, our executive editor at Frontier Africa Reports. I'm Temple Ashaju once again. Let's hit the indexes at this point. Nigeria was positive 1.21% yesterday, 41,584.94 is the psychological position. You got Ivory Coast, the BRVM stock exchange, positive as well by some 11 basis points. Egypt positive by some 15 basis points for Tuesday, and Kenya rose by some 0.24%. But South Africa, the Johannesburg Stock Exchange, perhaps by some way of profit taking, was down by some 0.99% on Tuesday. And of course, we do hope that the market resumes with some positive trends again today. Let's look at the Eastern African markets headlines that we're tracking. Kenya's fiscal deficits to hit some 1 trillion shillings in the fiscal year 2020-2021 versus the 796.8 billion shillings that they had posted in the previous calendar year. Still with Kenya, insurance startup Pula raises some 600 million Kenyan shillings in funding. Choppies owing some $12.4 million debt to banks, suppliers in Kenya as well as Tanzania. You have Ethiopia and Japan signing an agreement for the production and supply of asphalt for road projects that should be going to the authorities in that region. We've got Ali to look at these headlines for us. Ali, what are your perspectives of these developments across the eastern part of Africa?
So, the Treasury put out a notice, and I think caught everyone by surprise at the optics of a 1 trillion shilling shortfall in the next budget. And bear in mind, that's assuming an improvement of nearly 200 billion shillings in tax collections year on year. So it is a very big call that the Treasury is putting out there. They've looked at borrowing more heavily from the likes of the IMF and the World Bank. There is a request which is being considered in this first quarter by the IMF. But essentially, there's a lot of skepticism about how much longer this can be kicked down the road with this kind of deficit funding. And I think, that the tax collection prediction is also on the optimistic side. So whilst, we'll have to see how market conditions turn out, we continue to see extremely high borrowing, and this has been a trend that's been there for about 7 years. So it's something to keep an eye on at the moment. The central bank has done extremely well in lengthening the maturity of debt. They've reduced the dependence on T-bills. They've gone out the curve. But also we'll have to keep an eye on how international markets behave. We've seen that appetite for emerging markets has returned. I think fund managers are at an all-time high in terms of emerging markets positioning, but we've got to hope for the spillover into frontier markets, and I'm sure that's something that policymakers will be checking on from East to West Africa. Pula Insurance, that's a $6 million raise. That's pretty significant. There's been a lot of interest and activity in the insurance sector. We've seen big players come in. Allianz team up with Jubilee Insurance. Prudential stepped in as well, amongst others. And there is a perception that insurance will also benefit from this digitization trend. And therefore, there's also money going into that fintech aspect of insurance, which is also quite exciting, I think. Choppies, they came with a lot of fanfare into the East African market. The story of Choppies out of Botswana, expanded at a breakneck speed all over Africa. But here in Kenya, we're not successful. At that time, when they entered the market, Nakumatt was quite a fierce competitor. And now we've seen the entrance of Carrefour. These are the franchise holders out of Dubai who hold the franchise for the Middle East and Africa. And they've literally taken up all the Nakumatt stores that were there. and now dominate that component of the market. The middle segment, which was what Choppies went after, also has a lot of competition, and really the dominant party is Naivas. They raised some capital from some French private equity company last year and look as if they're the strongest player. But $12.4 million are the losses that were left as they closed down. Japan stepping into Ethiopia, it's a small call, it's not enormous, but it speaks to the Japanese interest in Africa, taking smaller bets than China, but very well thought out. And this is part of that strategy of Japan, which was something that Shinzo Abe started and promoted under the TCAD umbrella. It'll be interesting to see what else they get up to this year.
Right, Ali, thank you so much. Bosun, have you got anything to say about these headlines? I'm concerned about the fiscal deficit in Kenya. I read in the news again yesterday that the government is now looking to trim the deficit by some 7.5% for the 2021-2022 calendar year. How feasible is this development, or is this plan?
I think we have a bigger picture on our hand, a bigger problem on our hands across many of the sub-Saharan African states. And if you look at the latest IMF World Economic Outlook reports that came out yesterday, it just paint a picture of the fact that a whole lot of African economies are in serious problem down the Sahara, excluding North Africa. So to that extent, it is something that we need to or every sovereign need to pay attention to, in particular the big economies within the region, from Ethiopia to Kenya, down south to South Africa, all the way to West Africa, where Nigeria is, and Ghana and Cote d'Ivoire, some of the big names.
Okay, Bosun, thank you so much. Yeah. Let's now move on to the Western African markets, where, of course, the central bank, CBN now, the MPC of Nigeria, had its meeting yesterday. They also had a briefing after the meeting, after the two-day rate-setting meeting. CBN's 5% intervention fund repayments now March 31st, 2022. Exchange rate already converging, says CBN's Mahmoud. Conoil, these are some corporate stories now. Conoil and flour mills, their details are there. Liberia is expecting some $800 million investment talks with ArcelorMittal South Africa to be fruitful. And we know that Total in Senegal has announced a pre-tax profit of some 4.265 billion CFA for the first half of 2020. Bosun, you're the man from West Africa. I have to come to you again for this headlines.
Well, I think I'll start with the corporate news. Good news on the side of the Flour Mills PLC. This company has been able to ramp up very well. Got a whole lot bigger. Its advertisements is on the pages of newspapers, on television, on radio. They have a whole basket of portfolio of goods from upper market, mid-level, low-level markets, and they've benefited immensely from the last 1 year border closure, land border closure by Nigeria. They've been able to leverage their experience in Nigeria. Don't forget, Flour Mills has been in Nigeria, even I think a few years before independence or thereabout, started by the Greeks, and they've been able to really drill down into the Nigerian economy. They understand the market, they understand how we work. This week, I think late last week, they listed about 50-60 billion naira bonds on the Nigerian Stock Exchange. They're able to do a whole lot of debt offering over the last 3-5 years. So they know exactly what they're doing. Unilever is a total different story when you look at the fact that the household consumer products are getting hurt by folks who are no longer able to buy the big refrigerator, the big deep freezers, the air conditioned that the middle class or working class like you and I were able to afford. So it puts a whole lot of pressure on Unilever, because disposable income of Nigerians to buy some of these goods are becoming very difficult. No thanks again to the COVID-19 pandemic, job losses, reduction in salaries for months unpaid. So Unilever is really under pressure, by the way. And if you look at the corporate sector, by the way, that's also one of its big customers, clientele, this also suffering because you see a lot of business closures and what have you, tax issues and all of that. So it's going to be a little bit of, so there's a bit of food first, food and consumer good first. Then you can talk about household consumer products. If you have a refrigerator or whatever, you better service it or an air conditioner and continue using it. You can't just change it because, and then you look at exchange rates, by the way. So exchange rate from 150 to 350 to 395 to 480 yesterday on the parallel market. Oh my God, the cost, things have gone all the way up. So that's on that side. Conoil is a good story. We're happy that we have Nigerian indigenous companies that are now partaking in the oil stream sector, buying this 40% from Chevron. OML, it's 86 and 88. This came just about 1 week after Hayes Holding did a similar deal, 45% into Shell, ENI, and Total deal in another OML in Nigeria with Transcorp somewhere in the middle. That's big news as well for Nigeria. The central bank will continue to hold, will continue to try and use whatever means to converge the interest rate. Exchange rate. That was what we got yesterday evening from the central bank deputy governor, director in charge of monetary policy, Dr. Mahmoud Hassan. The central bank made a whole lot of announcements yesterday, but that's still a whole sort of subject of conversation moving forward. Thank you.
I agree with you. Now let's move on to the Southern African markets, where African Bank loses some 560 million rands in 12 months to September, as opposed to versus the 267 million rands that they had gained in the previous calendar year. Staynoff revives plan for share sale of Pepco after COVID-19 delays. And of course, Pepco's revenue was up by some 7.7% to 20.3 billion rands in 3 months to September. A Huge Group Limited applies for secondary listing on the London Stock Exchange. I'll bring you in, Ali, for these headlines here again, and let's hear your thoughts about the developments with African Bank. The earnings was coming just hours after the CEO abruptly resigned, from the board of that company. Give us a sense of your understanding of what's going on in that corporate firm, that firm.
So I think, what we've seen is higher beta banks have come under significant pressure, and I would put African Bank in that category. It has been, last year was a very difficult environment for banks, and we saw a deterioration in credit quality, and African Bank was not playing in the top tier risk. And therefore, it was, in my opinion, predictable. And I think what you've had here is an example of a CEO having to exit after a very poor performance. But I think you had a difficult environment and poor execution in that context. If I can go to your Sonangol headline, Angola, of course, has been in negotiations with the Chinese in order to defer some of their debt payments. It seems they've come to some kind of conclusion. They haven't had a haircut on their debt, but they've deferred some of the debt payments. Sonangol, of course, was the jewel in the crown for Angola, but is also heavily dependent on a further recovery in the oil price in order to get themselves out of this jam. We've seen, debt to GDP in Angola is well above 100%. And it remains a very complex task for the President Lourenço there to navigate his way after 3 decades of Dos Santos rule. And I don't think there's a silver bullet for Angola yet. What I found interesting...
Oh, looks like we lost the connection to Ali there. Okay. It's unfreezing yet. Bosun, let me come to you on this conversation.
Yes, Ali was speaking about the Sonangol and the Angolan oil industry. A couple of news also coming through this morning about the Angola's state of debt, which is being discussed with the Chinese. This was a bold move, but Angola is not letting up. They look at 6 oil blocks. They said exploration and production will continue in the current year, which is 2021. That is the second largest oil producer in Africa. not too significantly far from Nigeria. They're also concerned about while Nigeria is also trying to rev up its own production. They know Nigeria's compensation period will end by March, in line with the OPEC DOC document. Then the race is on. With oil price now around $55 a barrel, outlook for this year by Citigroup is about $65 per barrel. If you're able to touch between 55 and 60, that would not be a bad idea. Angola still need the money, but a whole lot of restructuring internally within the economy should be able to take out a whole lot of excess fat and let Angola also have a more sustainable economy moving forward. Again, albeit this is a whole issue across Africa, by the way, in terms of corrupt practices by previous administrations, accusations against the current administration as well. So it's a whole little bit of messy arrangement out there. But again, we can use some good news, so to speak, and this is a good outlook from Sonangol, from Angola.
But before we exit the South African trade, what do you make of the strategy that a huge group is making by going to list secondarily on the London Stock Exchange, despite being listed on the Johannesburg Stock Exchange?
If it gives you an exposure, if it gives you additional exposure, it gives you a bigger footprint at the global space. New York Stock Exchange on Wall Street is world #1 financial center. Of course, that's still debatable between London and New York. The fight is never over, by the way, who's #1 or who's #2. Okay. So, who's the financial capital of the world? So, is there always a fight between New York and London? So, but again, New York Stock Exchange, Wall Street give you a bigger exposure, whether it is on New York Stock Exchange or NASDAQ or you go list elsewhere. The whole idea is that you're listed in the US makes a whole lot of difference. London is there. London gives you a whole lot of exposure. London gives you a whole lot of international footprint. It gives you a whole bigger size of the global market. And again, if you're looking at a different horizon moving forward, I think London is the best place to be.
Agreed. Now, to finalize and wrap up the show, let's move to the Northern African market, where the bank ABC is eyeing the stake in Arope Egypt after buying Blom Bank. Arope is actually a subsidiary of Blom Bank. DICE plans 52 new branches in 2021 and cancels 2019 divisions. Then you have Libya's crude oil flows back to 1.25 million barrels per day after pipeline fixture, actually. Then you have AFM buying majority stake in Rabat-based Assurance Al-Fahd. In Tunisia, the National Agriculture Bank's income surged by 4.5% to 683.7 million dinars for the 2020 year. Bosin, you're the one I've got here for now. So, what do you make of these headlines here? And the fact that in the northern part of Africa, there's a whole lot of investments and mergers and acquisitions, corporate news almost every day now.
Yes, the raft of corporate news coming through in terms of the earnings season. So I'm sure some of the stories you put out relates to our earnings, whether it's the Tunisia's National Agric Bank income 4.5%. Diners in 2020. That's one good news within the banking space. The DICE plan is also one of the new of the banking sector also in Egypt. 52 new branches is 2021. They're canceling dividend for the year 2019 so that they can plow that money back into an expansion. That is also speak to banking sector consolidation. And you spoke about the Arope Egypt and the Blom Bank. The bank ABC is everybody's looking for consolidation. Remember a few days ago, we touched on the fact that Nigeria's Access Bank is also looking forward to step into the North African corridor. Is going to be the first Nigerian commercial bank that will have an inroad. The Moroccans, the Egyptians are also looking to make inroads into Egypt and West Africa as well. So the whole lot of financial market services in Africa is changing. And particularly as a journalist, as a financial journalist, I'm particularly happy that these developments are taking place. Now we're going to see a totally different Africa in which banks, financial services, and all the trade are not restricted to your region. so that investment flows, so that we can make capital flows. Dangote Cement has opened the way and opened everybody's eyes that you can do business in different countries. We want to see a Nigerian Broad Street, for example, and you can see an Egyptian bank, you can see a Moroccan bank, you need to see a Guinean bank, you need to see a bank from Sierra Leone, you need to see a bank from Botswana, from Eswatini. Look, and then the same thing in Egypt, the same thing in Mauritania, the same thing in Congo DRC. The more, the better we integrate ourselves, the way it's done in Europe. If you go to London, you see UBS, you see all the European banks, you see Italian banks, Santander, and if you go to Italy, Spain, UK, everywhere, it's all mixed. So it all makes Africa becomes a whole lot bigger. The whole problem of small illiquid markets and economies that we all run, 54, can all become better so that countries that have excess can spill over, or equalization kind of, to those who are very smaller, and they can help. And they can see there'll be a lot of cultural integration. If you have Egyptians in Lagos in the banking hall, look, it's going to help us because we're all Africans. So you can also go walk into a bank in Lagos and you're seeing that the person attending to you is a Moroccan, or is a Tunisian, or is a Ghanaian. Oh, look, or you go to a bank in Egypt, or you see that the person attending to you is a Sierra Leonean, or a Guinean, or someone from Ivory Coast. The whole Africa integration thing that the African Union and all of that have been pursuing for decades, it is the financial markets and the trade and services that will make it happen. Right. It's not a political issue. And until that happens, we will not really be able to benefit from each other's markets. If you have foreigners working in a foreign bank in Nigeria, for example, they'll be interested in buying into the Nigerian stock market, for example. They'll buy Nigerian bonds, they'll buy Nigerian treasury bills. So we now begin to have a financial inclusion, financial leverage, that wealth creation and languages, a whole lot of things can happen tempo, and I can just go on and on.
I agree with you.
So it's a whole new horizon that this whole new AFCFT, and I think it's getting all the banks, everybody in Africa now, looking outside your fence and say, look, no man is an island. Nigeria is big, but you can't do it alone. You need to step across the borders.
Right. Thank you so very much, Bosin, for making all of this analysis. I mean, I couldn't agree more. You're correct. You're really right, because hedging is something that a lot of companies, as you mentioned earlier, have actually been able to do in advanced markets, and it's one of the things that has actually helped these economies to integrate better. Thank you so much, Bosin Omofaye, our executive editor at Frontier Africa Reports, for all of this analysis. We'd like to also thank in absentia Ali Kansachu, the founder of Rich Frontiers Management in Nairobi, Kenya. He started the show with us, but eventually the internet glitch that he happened to have at that end of his disconnected him from us here. But this has been Frontier Opening Bell for today, the 27th of January 2021. I'm Temple Ashaju signing off. See you next time. Thank you for joining us. Bye for now.